Josh Brown, you mentioned that you were also noticing the defensive feel to the market. Do you pay attention to things like seasonals and worry about September, especially going into a period where we do expect the Federal Reserve to look to start scaling back some of its stimulus?
Not really. I think the concern about this time of year is that historically we've had some of the worst crashes take place in October, and markets having topped in advance of that in September. The classic example being 1929, of course. People came back from Labor Day, did a little bit of selling that put the top in the market, and then a few weeks later we had Black Friday, Black Monday, and then of course there was like the Lehman Brothers crash of '08. Like we know that you get some pretty big storms historically in October, and that markets have historically topped in September. We also know that there'll be some volatility when the Fed does actually utter the word taper officially, which I don't play that game. You guys know that. So if that's why people are plowing money into treasuries yielding 1.3%, that's their problem. I'm willing to bear that volatility. My time horizon is more than 1 year, right? So I think you have different cross currents in the market based on different people acting in what they think is their own best interest. But in the end, it's a new generation taking over the market. They have disposable income. They're in demand from employers. They're plowing money into their 401ks at record rates. And stocks are going up. And if we have a taper tantrum or whatever, and somebody thinks that that's a reason to make a big change in their portfolio, that's their problem. They need to work with an advisor and take their hands off the button. We don't do that. We don't play that. I eat volatility for dinner. So that's where I am with that. And if people want to get defensive ahead of that, they're welcome to do that. There's nothing wrong with that. It's probably better than running and hiding.
Rod, where would you advise people look in terms of the offense versus defense spectrum in terms of allocating into this market or away from it or within it? Cyclicals lagged a little bit the last couple of months. Is that an opportunity or is that a warning?
Hey, Mike, thank you. Listen, what we're seeing at the UBS from this perspective, our clients are, first of all, seeing typical summer markets. Volatility is low, trading volumes way below 20-day moving averages. So I think it would be dangerous to read anything into current action. Take that as an indication of what the market sentiment should be. We still believe that the flow and the reopening of the economy is going to be favorable for financials. We think that energy, things, the box that we've a lot of flow in here largely over the last several weeks. We think that is a trend and it will continue. It took a little bit of a 3-month vacation between May and today for these resales, but we've had a lot of noise, and the market has climbed many walls of worry. But really do think it's important to stay focused. As a reopening trade, and that comes down to value stocks, financial, energy, those types of things. Some of the things that, quite frankly, did not do particularly well in today's light volume.
Yeah, giving you a chance perhaps to add back on those.